truly hawkish. Market was anticipating 70 to 80% probability of a rate hike in a run-up to this meeting. And a rate hike along with an anticipated reduction of a bond purchase is hawkish than expected. It kind of actually keeps the door open for another rate hike, in my view, before the end of the year. I mean, I can see why they did what they did, which is obviously cost of living has gone up 2% pace over the past 2 years. Inflation heading around 2.8% over and above the BOJ target of 2%. Economic growth has weakened a bit because of weaker consumption, but one could argue it could be because of inflationary pressures. So it became a must for BOJ to tighten the policy, support the yen, and cap the inflation, which is what they did.
All right, we look to the BOJ, but we're also waiting on the FOMC today. Lots of expectations for a pause, but then we look to September and any guidance that they are going to be giving today. What are you looking out for?
I think it's kind of a non-event for FOMC. I think it's going to be a status quo. Chair Powell has set the stage up for a September rate cut, and that is what market is anticipating. We are penciled in for a rate cut in September with another possibility of one in November or December. I'm not expecting anything else from Powell because he just addressed the nation and a bunch of economists basically a couple of weeks back, where he said labor market is strong, we are getting closer, but we are not there yet. I think he would probably maintain the same narrative, but he might set the stage up for September rate cut.
We're tracking some geopolitics in the last hour, and we have now the Hamas chief being killed in Iran. This is Ismail Haniyeh and his bodyguard, which Hamas has called a dangerous escalation and will not go unpunished. What should we be looking out for? What do you think? How is the ripple effect going to look like across the markets?
I think it's going to be a very volatile market. Geopolitics takes a long way as far as the financial markets are concerned. We have seen that, especially more so in the equity markets. But given with whatever is happening at the moment, the all eyes is on the earnings, S&P data that's coming out of the US, the non-farm payrolls, the central bank. So I think all of this will probably shield the geopolitics for the time being, in my view.